What's up, clan? Island FX Trader here again. Yeah, we're back again. Hope the week was good for everyone. In today's video, we're going to be doing, somewhat of a vlog, and we'll be doing a trade recap as well. Um, of course, I think this video is probably going to be dropping on Sunday. Well, right now it is Saturday. When you're watching that, it will be Saturday. That section of the video will be recorded on Saturday, but the video will be dropping on Sunday. We're going to be doing a bit of a birthday vlog. As some of you would have known, last week was my birthday. We went to a nice little resort to get some breakfast, to chill for a bit. So we're going to have some clips in there, and we're going to be looking at, I think it was a NASDAQ trade. So there were two trades that I took on the 25K. We're going to be looking at that, and also I'll just be touching on the free 5K that Funding Pips gave. Very interesting story on this one, but we're going to be touching on that as well. So let's jump right into the video. Ciao. Okay, so we're on the chats now. Let's get down to business. Okay, so what we'll be looking at is NQ. That is what we're going to be looking at. NASDAQ, as you can see, it's on the chart here. So that is what we're going to be looking at. I'm also going to put the weekly P&L for the 25K. Like I mentioned, it is in drawdown. I'm trying to bring it back up. They just migrated over to MT5. So in a sense, things are kind of fresh for me. I'm not too sure how much drawdown it is in, but I would say roughly between 4 and 5%, if my memory serves me right. At one point it was down 7. So we're slowly getting there. The good thing about well, I wouldn't say the good thing, but the best approach to trading, especially when you're trading with prop firms, would be to have a personal account. Trust me, that's the best approach. Imagine I wasn't funded, right? And I'm going through evaluation phases. Imagine 2 phases of evaluation. Some of them is 5% first phase, 10% second phase. All of those percentages could have been taken on a live account. That would be real profits. So my advice to anybody is ensure that you have a live account when you're trading a prop firm. So essentially, I did not miss out on those trades when I was going through my evaluation phase, right? And even right now, trying to bring the prop firm into trying to bring it back into break even, I'm still not missing out on those trades because I'm taking those trades on my live account as well. So at the end of the day, I'm still making profit. So if you're trading a prop firm, ensure that you have a live account. All right, now I don't want to go too much on a rant, so let's just jump straight back to the charts. NQ. Okay, so one of the first things that we noticed on NQ, lately I've really fallen in love with the weekly time frame. Let me tell you, the weekly approach, perfect. Okay, so NQ, they've been pushing, right, bullishly. At one point I noticed that they broke this low right here. They broke this low and they closed below this low. Not only did they close below that low, we could see right here one weekly bearish fair value gap and a second weekly bearish fair value gap. So when I saw that, I said to myself, one, okay, they could either, we're not taking into account this price action right here, they could either drop below this and come back in here for a drop. Okay, that didn't happen. Later on, you could see they form another weekly fair value gap, and this is what I took advantage of. So let's get into that. So weekly fair value gap marked off, price was bullish at one point, and it came back into this weekly fair value gap and then it dumped. Okay, so let's jump to the 4 hour. I would say let's jump to the 4 hour. So my approach is, anytime I have an aggressive approach and I have more of a, how would I say that? I would say a careful approach, a aggressive approach and a careful approach. Anytime I see price pumps into a weekly fair value gap and they dump, right? And when they dump, they actually leave behind 4-hour fair value gaps. I have a rule that I could actually enter after that 4-hour fair value gap has been created. So this is a low right here. This is the first dump. Okay, that dump barely closed below this low right here. And if you're not seeing the low properly, you could always go to your line chart. So this right here would be the low. Okay, so the first push to the downside barely closed below that low. We had a second push to the downside. That is all I need for my aggressive approach. And this time around, I took an aggressive approach. As a matter of fact, there were two approaches for that one trade. So we're going to get to that. Okay, because if you could see from the PNL, I have one L from NQ and I have one W from NQ. So we're going to get to that. So this was my initial overview. As soon as price taps back into that 4-hour fair value gap, let me go ahead and just mark that out. So I'm going to take off the weekly. Don't forget, this is our weekly. Let me go ahead and put in that 4-hour fair value gap right here. Bam, nicely. My thing was, as soon as price taps into that, I'm going to put my stop loss all the way here, and then I'm going to target the 4-hour close. I don't like to target wicks. I love to target my close. Okay, so this is what I did. Some people might argue, but that stop loss is so big, so at the end of the day, what works is what works. Eventually, if I figure maybe I could pull my stop loss above the fair value gap, that would work. But you have to stick with what works. Okay, now this approach was my second trade. My first trade, when I saw this, right? So I woke up in the morning. I have a friend that trades as well. So I told him, yo, I'm seeing a real nice opportunity on NQ for a sell. And if he's watching this video, he's definitely going to confirm to that. So I told him I'm seeing a really nice opportunity for a sell. So all this price action did not play out. Essentially, all we had was this right here. So this double top that you're seeing here, this 30-minute double top, that is all we had. So I told him, if price breaks below this low right here, this 30-minute low, this is it right here. If price breaks below this 30-minute low, we're going to go in, we're going to take that trade. As a matter of fact, I think we were looking at it on the 15 minutes. And then I don't think it was news. I think it was 9:30, right? 9:30 hit, price blasted down. And then we were like, okay, yeah, we're getting in. As soon as price retraces back into those lows, we're going to get in. And of course, we're going to target the 4-hour low. And guess what happened? They came in and they swept the highs. They came in, they swept the highs, tapped into the initial outlook on the trade idea, and then they dumped. So, sometimes you have to just stick to the initial plan. Now, they have had cases where price doesn't tap into the higher time frame PDRA, right? And it taps into a lower time frame PDRA. So for example, with that opportunity, we had a very small 30-minute fair value gap right here. Okay, very small 30-minute fair value gap. Okay, and you could see price tapped into it. When price tapped into it, it dumped. Okay, now like I mentioned, there are times where price respects those little PDRAs and it would respect the high. Well, this was just a case where it didn't happen, and our initial trade idea was what price did. So essentially, when I saw price push all the way in, all I did on the second trade, I did not enter with the same risking the same amount. I did not enter risking 1%. I'm not eager to try to make back my losses, and that is where a lot of people fail. They take an L, they quickly try to run and try to cover up that loss. Eventually, this is going to spiral you into what you call revenge trading. So every time you take a loss, you keep trying to make that win back. You keep trying to cover it. You keep trying to cover it. Eventually, you'll dig a hole that is too deep and you cannot come out from it. So all I did, I cut my initial risk in half. So the first time I risked 1%. I went ahead, I risked 0.5%, which is half. That's all I did. And then I just waited for price to hit TP. And price just melted nicely, and you could see price kept on melting. Price kept on melting all the way to what would we have gotten? All right, we would have gotten a 1:2. But at the end of the day, you stick to your trading plan. Okay, so already when I first started the day, I had my initial trading plan. I did not stick to it. Why would I try to not stick to it again with the TP and put the TP down here? Nah, one thing that I notice is oftentimes when price takes out a 4-hour, a daily, a weekly high or low, there's some type of retracement, some type of reversal. So I played it safe, and then this is why I TP'd. All right. So this was pretty much it for the trades this week. Well, I did have another one. I believe that was EuroCHF. I remember it says me right. But we're just going to be looking at NQ, and essentially, the mic fell. But like I was saying, essentially, NQ was somewhat of a lesson, right? All it taught is stick to your plan, all right? Stick to your plan no matter what. So that's it for today. See you guys in the next video, and I hope you guys enjoy the upcoming vlog. Ciao. What's the name of that waterfall again? You don't have a name?
You see, you there watching. You're watching where you walking.
Wasco Fall. Welcome to Wasco Fall. Okay, so one last thing. I did indicate that I was going to talk about the 5K that Funding Pips provided. So the crazy thing is, and I'm going to put it on the screen, so more than likely it's going to block my face. I was 1% in drawdown. Now, before I even mention the 1% in drawdown, I did pass the first phase of the funding of the account, and I'm going to put up the certificate for phase 1 because I did get that. However, in phase 2, I think I only took 2 trades in phase 2, and those 2, I think the first one was a win and the second one was a loss of, I think it was a 2% loss if my memory serves me right, but I know altogether or in total I was down 1 point something percent. I'll also put a screenshot of that. I was down 1 point something percent and I lost the account. Now, I'm saying all of this to say, regardless of me not reading the rules, right, I take accountability for that. But if prop firms are truly there to help, there should be no rule that would allow a prop firm to take an account from somebody when the person is just 1% in drawdown. That makes no sense whatsoever. When prop firms just came about, you know, it was a big thing. Everybody was talking about it. The whole goal was to help traders, and you know, to give traders the ability to trade with larger capital, you know. But right now, that is clearly not what it is. So my thing for you is, if you trade prop firms, just try to ensure that you follow the rules. Don't go for those extra, you know, those fancy steps that they provide. You know, some of them have one phase, some of them have instant, and even in the instant funding there's little things to catch you. Some of them, the overall drawdown is 6%. It's all a whole bunch of us. I would just say go for the 2-step, your regular 2-step. Take your time with it. If you're able to get a prop firm that offers 8 and 4, kind of like that first prop firm that really went viral. I can't remember the name, but that was the first prop firm to like shut down. But I did remember in phase 1 they would offer, you'd have to make 4%, and in phase 2 you'd have to do 8%. If you could get a prop firm that does 4 and 8, go with it. If you get one that does 5 and 10, you know, go with it. But do the 2-step because there are a lot less hidden rules, and when you do those fancy things, that is where all those hidden rules are. And essentially the prop that they give, it was free, but it was one of those fancy ones. So it was a 2-step pro. Overall drawdown would have been 6%. Of course, I wouldn't have gotten there, but just imagine that being 1% in drawdown and losing the account to a rule. So you tell me, are they for traders or are they for themselves? But that's it for the video. Ciao.